This week, the world of AI investing was shaken up. Big tech announced a spending spree of historical proportions, sending shockwaves through the market. While some giants stumbled under the weight of their own spending plans, one company stood to gain from it all, staging a surprising and powerful comeback after a rough week. The big question on everyone's mind: was this a sign of a sustainable boom, or are investors right to be nervous about the massive price tag of the AI revolution? Welcome to TickerWatch News for Nvidia, Week 6, 2026. In this episode, we're breaking down the major news and market developments for the company that sits at the epicenter of the artificial intelligence buildout. From blockbuster spending announcements to new strategic partnerships, here's what you need to know about this week's events for Nvidia. Stock snapshot. It was a volatile week for Nvidia. The stock entered Friday on a 5-day losing streak, down more than 10% for the week. However, shares staged a dramatic turnaround, closing the day on February 6th up around 8% at approximately $185. This surge was fueled by a rebound in tech and a wave of positive news, though it wasn't quite enough to erase the week's earlier declines, with the stock still ending the week in the red. Trading was heavy, with volume exceeding 229 million shares on Friday. This happened in the context of a broader market rally to end the week. The Dow Jones Industrial Average crossed the 50,000 mark for the first time, and both the S&P 500 and Nasdaq posted strong gains on Friday. Despite the bounce, like Nvidia, the major indexes also finished the week with losses after being hit by concerns about the costs and competitive disruption from artificial intelligence. Top news and headlines. The biggest story driving Nvidia this week was the staggering capital expenditure plans revealed by Big Tech. The four tech hyperscalers, Microsoft, Alphabet, Amazon, and Meta, are collectively on track to spend upward of $650 billion in AI investments this year. Amazon alone announced it plans to spend around $200 billion in 2026. This news sent a clear signal to the market. The AI infrastructure buildout is accelerating dramatically. As one analyst from D.A. Davidson put it, "It's all going to Nvidia." The chipmaker's stock surged Friday as investors concluded that Nvidia stands to be the primary beneficiary of this spending. CEO Jensen Huang called it a once-in-a-generation infrastructure buildout, stating that demand is sky-high. Expanding its reach, Nvidia announced several major partnerships, pushing its technology beyond its core data center business. The company unveiled its largest-ever collaboration with Dassault Systems to integrate Nvidia's platforms into Dassault's virtual twin software, aiming to revolutionize industries from life sciences to manufacturing. Another partnership with Opentrons is set to bring AI into laboratory robotics, speeding up scientific experiments and drug discovery. Nvidia also introduced Earth-2, an open-source AI platform for climate and weather forecasting. These moves underscore a strategy to become a full-stack AI company embedded in real-world science and industrial automation. The relationship between Nvidia and OpenAI was in the spotlight. Reports this week indicated that Nvidia is nearing a $20 billion investment in the AI research lab. While this figure is smaller than a potential $100 billion deal mentioned last year, it still represents a massive commitment. Both Nvidia CEO Jensen Huang and OpenAI CEO Sam Altman publicly denied rumors of a strained partnership, reinforcing their strategic collaboration, even as reports noted OpenAI is exploring other chipmakers for specific, less intensive tasks. On the geopolitical front, Nvidia's efforts to sell its H200 AI chips to China faced continued hurdles. While the Trump administration has reportedly approved the sales in principle, a national security review by the U.S. State Department is holding up final clearance. The delay has created uncertainty, with Chinese customers reportedly pausing orders until the licensing conditions are clarified, highlighting the ongoing risks tied to U.S. tech controls. Finally, a report from The Information suggested a significant strategic shift may be underway. According to the report, Nvidia could forego releasing a new GPU in 2026. This is due to a memory site crunch, with the company prioritizing its high-margin data center AI accelerators, which use the same scarce high-bandwidth memory. This move would signal a clear focus on the enterprise AI market over its legacy consumer gaming business. Market reaction and investor sentiment. Investor sentiment for Nvidia was a tale of two halves this week. The stock was battered early amid a broader software sell-off, driven by fears that AI could disrupt established business models. However, sentiment rebounded sharply by Friday. Retail chatter on Reddit turned from bearish to neutral to bullish, with traders focusing on the massive AI spending plans from big tech as a major positive catalyst. Analysts remain broadly positive. Nvidia currently holds an average brokerage recommendation between a strong buy and a buy. The consensus is that the company's premium valuation is justified by its immense growth prospects. However, there is some caution. A report from Semi-Analysis predicted that Micron would not receive any orders for Nvidia's next-generation HBM4 memory, suggesting Nvidia will source from competitors SK Hynix and Samsung instead. This highlights the intense competition and complexity within Nvidia's supply chain. At the same time, the AI chip space is attracting significant investment, with rivals like Cerebras and Samba Nova raising substantial new funding rounds, indicating that while Nvidia is the clear leader, competition is well capitalized and intensifying. Technical and fundamental check-in. From a technical perspective, Nvidia's stock experienced a sharp downturn followed by a powerful recovery. After a 5-day slide that erased about $500 billion in market value, the stock found its footing and surged nearly 8% on Friday to close around $185. However, it remains below its 52-week high of over $207, which it hit in October of 2025. Fundamentally, the narrative is overwhelmingly focused on growth fueled by AI. CEO Jensen Huang has been vocal, defending the aggressive spending by big tech is sustainable and predicting the AI infrastructure buildout will continue for 7 to 8 years. The company's data center division now accounts for roughly 90% of its total revenue, with GAAP gross margins holding strong in around 75%. However, the company's valuation is a key point of discussion. With a forward price-to-earnings ratio in the high 30s by some measures, it trades at a premium to the semiconductor industry average, which could make the stock volatile if it fails to meet lofty growth expectations. Key risks include intensifying competition, regulatory hurdles like the ones seen in China, and supply chain constraints, particularly around high-bandwidth memory. What to watch next week? All eyes will be on Nvidia's Q4 earnings report, scheduled for February 25th. Expectations are incredibly high, with analysts forecasting year-over-year growth of around 70% for both revenue and earnings per share. This report will be a critical test of whether the company's performance can continue to justify its premium valuation and the market's bullish outlook. Beyond earnings, investors will be watching for any updates on the final approval for chip sales to China, as well as broader economic data like the delayed January jobs report, which is due out next Wednesday and could influence overall market sentiment. Looking at potential scenarios, the bull case is that Nvidia delivers a blowout earnings report and provides a strong forecast, confirming that the massive capex from big tech is translating directly into orders. The bear case would involve any sign of slowing growth, margin pressure, or a weaker than expected outlook, which could trigger a sell-off given the stock's high valuation. The base case is likely continued volatility as the market digests this week's news and positions itself ahead of the crucial earnings announcement. Thank you for tuning in. The information in this podcast is for educational and informational purposes only and is not intended to be financial advice. Please be sure to subscribe, leave a review, and share this episode if you found it valuable. We'll be back next week with more updates.